Hi, Jonathan York, Bay Financial Partners, looking at investment markets. The coronavirus, or COVID-19 as it's now called, still really dominating investment markets as authorities really just trying to get ahead of the disease. Certainly no sort of cure yet, although people are being cured from it. But that's more sort of natural causes and just the sort of virus running its course rather than actually finding a cure for it. Also, as well, no sort of vaccine as yet. Various companies sort of working on that, but again, that's sort of 3 to 6 months down the road at least before you can sort of get into any sort of testing. What does seem to be evident though is that potentially cases sort of are falling a little bit. Certainly outside of mainland China, you're not really seeing it as much with the sort of travel bans put in place, etc., on the quarantine. That really is trying to sort of get ahead of it and just trying to sort of limit the exposure out there to the rest of the world. As yet, the sort of economic impact is really yet to be seen. Interesting, and this morning Apple have come out and said that their first quarter earnings will probably be a little bit lower than anticipated. That's really on sort of reduced demand coming out of China and also potentially sort of supply disruptions as well coming through. But again, most analysts and economists really expect any sort of sort of supply glitch and the sort of hiccup from COVID-19 be relatively sort of short term. As they don't really see this as a sort of a long term issue for the global markets. So against that backdrop, obviously in the US, we've got the election, sort of starting to gain a little bit of momentum now, heading into Super Tuesday on March the 3rd. Now that's really going to be quite interesting because certainly in the Democratic polls, Michael Bloomberg is starting to make a little bit of ground. The latest poll has him placed in second place now. That's coming up quite a bit. Bernie Sanders is still leading, but again, sort of quite interesting that quite a few political commentators and pretty eminent forecasters, as Michael Bloomberg would face the greatest threat to President Trump in a head-to-head election. Now it also looks like Michael Bloomberg will now be on the stage for the next Democratic debate. And that'll be very interesting to see how he sort of performs in that. Certainly he's been spending quite a bit of money out there on sort of the advertising campaigns, and now sort of starting to creep up in the polls as well. Certainly if he does pretty well in the debate, then potentially he would then move into first place for the Democratic nomination. Fed really, as expected, left rates unchanged, and really not looking for too much change. Although obviously, COVID-19 maybe throws a little bit of a sort of spanner into the works in terms of their sort of thinking. But again, they sort of view that as relatively sort of short term. And now even some debate whether you actually see any further move from the Fed in 2020. Oil sort of suffered a little bit, as potentially we see a little bit of a global slowdown, but starting to sort of even itself out at present. Interesting case in the UK with the budget now just about 3 weeks away. The Exchequer, the Treasurer, has resigned. Resigned maybe a little bit of kind. It looks like he was pushed. And that then poses some pretty interesting questions for the Johnson sort of cabinet. Potentially moving to a little bit more sort of hardcore on the sort of Brexit going forward now. That's obviously all done. But in terms of the actual policies they want to pursue and sort of trade deals, etc., maybe a little bit more sort of hardcore. And that could pose some interesting questions for the UK economy. Certainly, the Bank of England feel that growth will be impacted a little bit. Potentially there might even be a rate cut out there. Although obviously with UK rates, extremely low, you could argue that a further rate cut would have very limited impact. Here in New Zealand, the Reserve Bank left rates unchanged, no real surprise there. But maybe more surprising was the sort of commentary that accompanied that, potentially a little bit more sort of hawkish than anticipated. Rates on hold, they are a little bit more bullish on growth going forward, looking around sort of 3%. Most of the analysts and sort of economists are looking at sort of low twos on sort of GDP for New Zealand for the next sort of 12 months. And that also raised the question that potentially there's no further rate cuts here in New Zealand for 2020. Certainly the Reserve Bank, cites the sort of housing market, but, really is pretty buoyant again. Strongest sales for around sort of 4 years. House prices are moving up really across the country as well. And that's all sort of buoying, certainly consumer confidence out there. People are feeling pretty good. You've seen, quite a bit of activity, say, on the housing market, and that's sort of filtering through into the rest of the economy. Now, when you add that to the government sort of spending in terms of sort of infrastructure, etc., it really does look reasonably rosy for the New Zealand economy going forward. Certainly not gangbusters, but there's reasonable growth. You've got record low unemployment. Your record low interest rates, and there's consumer confidence out there is reasonably good. Now, obviously, against that backdrop of record low interest rates, it is pretty tough out there for investors looking for income. And if you are interested in discussing what options are available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.